Hello, today is February 24th, 2018. My last calls, I was looking for a pattern with an early high and a tendency to rally into the close and close near its high. That's what we got. Monday should be a pattern with an early low. We had a target of 2720.75 that printed. There was resistance over it and support under it. I have a standard rule, whether I say it or not, that gapping sharply in the undesired direction kills the call before the open. So had we gapped down sharply, this call would have been killed. I misspoke and said gapping up sharply would kill the call. I hope it was clear from context that gapping up sharply didn't really kill the call, it merely satisfied it. But if somebody wants to say I just missed it because I misspoke, I can't really argue with them. During the day, MEJT said this spectacular rally into the close is a false move, gives us a target of 2722.61. Unless we gap sharply in the undesired direction, which is up, that's my call. We have a wall into the close. Has a strong tendency to gap down when we reopen Monday, and that's what I think is going to happen even if we trade higher in futures. The reason is this is a very unlikely time for institutions to be purchasing with abandon regardless of the price right into the close. The assumption is retail customers are doing the buys. Specialists are left to provide stock to them, and they usually arrange things so when the market reopens they recover all the money they've risked by gapping the market down, and often they recover the money they risked plus a lot more besides. Here's some other arguments for this being the high. We have from this low, we have an ABC. C and A have a Fibonacci relationship. Here's your stilt, a diamond, inverted, a diamond on stilts. You take the height, take your Fibonacci ratio, and there's your high. So I think there's a good chance we gap down from the open, hit the target. The weekends when we usually look at longer term patterns, we believe we've completed 5 waves down. We're in the process of completing 3 waves up, somewhere around 2800, 2802 plus. If this is the end of wave A, somewhere around here, take your Fibonacci grid. We have B going down and then C going up. If there is a Fibonacci relationship, we're going to stop somewhere around 2720 or close to it, and that's compatible with the 2722 target of the MEJT system because we typically go just slightly beyond the target. The longer term call is we've completed wave gray B and we're in wave gray C down. I still get letters from people saying this move is too impulsive to be a corrective wave. Well, that's not true. A zigzag is a corrective wave. It's an ABC. That doesn't mean you can't have impulsive 5-wave moves within the pattern. We had an 8-month impulsive move right here. Got 1, 2, 3, 4, 5 waves, but everything prior to that wave can only be counted as a 3. There simply is no way to count anything prior to this as a 5-wave count. But you still had an impulsive action. It doesn't change the fact that it's a corrective wave. I'm assuming this is one down. Could be an A. If we top out here, where I think we will, around 2802, and then if wave 3 down is 1.618 times wave 1 down, which it often is, we're going to drop from around 2800 to 2250, probably in a very short period of time, similar to the time spent on this drop. That's a 20% move in a short period of time. It should be a put buyer's dream. In the long run, I think the whole wave 4 is going to be completed around 2023. The night President Trump was elected, futures were locked, limit down around 2028. We never came anywhere close to that in real time. This would satisfy the principle that extremes like that in futures tend to be seen in real time sometime. So unless we gap up sharply, here's my target. And I think even if futures overnight go higher than this, I think when the market reopens Monday, we're going to gap down and drop right from the open. That's today's call.